Tesla CEO Elon Musk's role in the Trump administration has grown rapidly since the inception of the Department of Government Efficiency. But with Tesla shares having one of the worst weeks since the election, investors are wondering if Musk's role in Doge is pulling him away from Tesla. For more, we're bringing in Cathie Wood, CEO and CIO of ARK Invest. Cathie, always great to see you. Tesla is still your top holding in your ARK Invest, ARK K, as we like to call it. That's the ticker. And you know, we've got, obviously, Musk very visible in Washington. But not only that, Time magazine put him on the cover behind Trump's desk as the sort of de facto president, if you will. Now, we have talked before, Cathie, about Musk's multitasking. But this is sort of next level, Cathie, in terms of where he is putting his attention. Is it a concern for you as an investor?
Well, it's interesting. We were on his earnings call last week, and I don't think I've ever heard him more engaged or more into the details, answering in detail analyst questions. So as I've said before, I think he's an amazing CEO in that he is a troubleshooter. He figures out where the pinch points are, the gating factors, and he goes right at them. And I think he's doing it very effectively.
I mean, at the same time, the stock has taken a big hit. I mean, he may be figuring out those points, but at the same time, we got a lot of reports recently about Tesla sales, being down, deliveries being down in places like China and Germany.
Yeah, what's happening is the Model Y, which is the largest selling car in the world, is going through a refresh cycle. And I can tell you personally, I went to buy a Model Y, and at the showroom, they said, no, wait, the whole thing's going to be refreshed. This was several months ago, and lo and behold, this is where we are. So I'm happy they told me that, and I think I understand why we're seeing sales lag here a bit.
So what turns it around, Cathie? What's the catalyst that moves this stock higher?
Yes, a couple of things. I think they're going to come out with their lower cost car this year. So that will increase access to Tesla's cars. Elon's always talking about affordability, certainly working on that one. And then, of course, autonomous. We do think that Tesla is getting ready to launch its autonomous service. We know they will launch. They announced the launch in June in Austin. And the question then is, how quickly will they roll out to other cities? And we think it will be more quickly than many think.
Another headline that we saw today is that the Trump administration, as predicted or as expected perhaps, is halting the government's $5 billion program to build out a national charging network. Is that a wash for Tesla? Is that a negative for Tesla if people don't have as many places to charge? Does it benefit Tesla because they're building their own network? How do you view that?
Yeah, I think, a lot of auto companies have already signed on to Tesla's standard. And so why not use the Tesla charging network instead of duplicating expenses with government subsidies on top of that? So I think it will benefit Tesla. I think it will be good for the entire ecosystem.
Cathie Wood drops some unexpected truths regarding the relationship between Tesla and Nvidia. She talks about how Tesla can benefit Nvidia during its rut, while other analysts discuss how Nvidia can very well carry itself as the AI king in the tech market space. As anticipation builds for their upcoming fourth quarter earnings call on February 26th, Bank of America Securities analyst Vivek Arya has stirred the pot with a buy rating and a bold price target of $190. Let's dive deeper to uncover how the pieces are aligning heading into 2025. Welcome back, everyone, to Investocracy.
Cathie, we're making our way through earnings season, that mega AI trade and trend, Cathie. Some names reporting perhaps some disappointment. I'm curious what you've learned this earnings season, looking at those reports, listening to conference calls. Has it changed at all how you want to invest, where you want to put money to work in that AI trade?
Well, as we know, Palantir has been a huge beneficiary of this earnings season. I think many people are beginning to understand that hardware, of course, is important. Cloud is important. But in order to deserve the valuations they're getting, there have to be beneficiaries beyond that. And we think platform as a service is going to take increasing share of the tech stack. And so that does benefit companies like Palantir, GitLab, and others that developers are signing on to.
I'm curious, though, Cathie, why, yes, those companies will benefit. I'm curious why you're not in the hyperscalers. So, we've talked before about you not being in NVIDIA. I'm curious why you all have made the choice to go the route that you have with Palantir and the other names you mentioned versus some of the other Magnificent Seven, for example.
I think we are in all of them in various of our portfolios. You're asking about ARKK, the flagship. We do own Amazon. And we do think, after listening to the call last night especially, the cloud is a central part of this story. So love what they're doing there. We were concerned for some time that maybe agentic personal agents were going to disintermediate Amazon on the retail front as our personal agents go shopping around the web for us. But, I do believe that Amazon's got, they said last night, a 14% advantage in terms of lower prices vis-a-vis other online shopping sites on average. So we're less worried about that. And as you know, we post our holdings and trades at the end of every day. So we have been building that one. NVIDIA we do own in other portfolios. We think there is huge demand going forward. But again, just listening to Amazon's call last night and to others, there's more competition brewing on the chip side of the equation. Amazon has two, Graviton and Trainium and Inferentia. So on the supply side, there is more competition brewing, and we are also seeing with DeepSeek, for example, there is a possibility that more of the large language models are going to be built on high-end workstations, maybe not so much dependent on the cloud. High-end workstations depend on fewer GPUs. All of that said, this is all at the margin. The whole space, we think, is going to be vibrant for years. We are so early in the journey here, and we're pretty excited about it.
Vivek Arya, with commendable acumen, depicts NVIDIA not just as a company, but as a stalwart force ready to break barriers and lead AI advancements. Arya sees NVIDIA as more than just a market contender, expecting reassurance during the Blackwell execution and a confident illustration of roadmap ambitions aimed at fiscal 2026 and beyond. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
We have this paper out of Stanford where these researchers claim to have trained a reasoning model for $50 in cloud credits. That's making the rounds.
Well, we can ask Renee Haas that. I think that by the end, these guys are going to make it so that they pay you to take that. I mean, there's a little absurdity going on here. Why is NVIDIA not at 20 or 30? Because it's not true.
Well, I think there's two different things here. Right. One is the potential commoditization of the AI providers, the OpenAIs, the Geminis, although it's obviously associated with the Anthropics. You want to go through them, and whether they will be sort of offering all of them a product that is very much similar. And so, what is going to end up differentiating them?
Right.
By the way,
has one.
OpenAI trying to raise another $40 billion at a billion plus dollar valuation.
Well, we have to hear what Amazon says, because Amazon could later waste everybody.
And then there's the other side of it, which is yes, but you're going to need inference. Inferencing is everything, and that's still going to require Blackwell chips from NVIDIA, the only real player, even though others are trying to design some of their chips.
Now, that's what we're going to hear from Renee Haas.
And any efficiencies will just be baked in and ultimately get us to wherever we're going a bit
Well,
faster.
what's hurt this period, it is the NVIDIA quiet period. And what if Jensen were to come out and say, you know what, I hope this stuff goes to zero, because then you'll be able to use the part of Blackwell that is so great, which I think is true. In other words, there was another recommendation today of NVIDIA. They're obviously trying to get it so that it stabilizes. But I think that NVIDIA, if we hear tonight that Amazon says, you know what, we got to spend and our Trainium isn't going to do it, we remain great partners with NVIDIA. If we hear remain great partners with NVIDIA, David, NVIDIA goes to 245?
Really?
Yeah.
As NVIDIA dances with AI, it keeps raking in contracts with industry behemoths like Microsoft and Meta Platforms, signaling unwavering confidence in its capacity to drive what's shaping up to be a $500 billion market by the late 2020s. The anticipation isn't just for stock gains, but for NVIDIA's strategic orchestration, where ASICs, with Broadcom and Marvell technology, tiptoe behind NVIDIA's predominant GPU force. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And with all due respect to Galileo, the center of the stock market universe remains NVIDIA. They're going to report their earnings on February 26. By then, I think this DeepSeek scare will have completely faded into a rearview mirror. In fact, more and more research is coming out that says that $6 million price tag may be just a little funky. Maybe it was more like $1.6 billion instead of a handful of old NVIDIA chips. Maybe it was 50,000 NVIDIA chips. So maybe the DeepSeek scare goes away. All right, I want to bring in my first guest, and let's start with NVIDIA. Lance Roberts. Hey, Lance, I just want to get your thoughts on this whole DeepSeek scare. It seems to be fading away a little bit. In fact, some are saying it sparked a bidding war for all the other NVIDIA chips.
Well, it did. And we actually wrote an article right after that came out and said, look, there's so many things we don't know. And now all this stuff's starting to come to light. Maybe there was 15,000 NVIDIA chips used. There's a whole lot of questions around that. But then also one of the things we've got to be aware of is this is a total Chinese-owned AI intelligence company. Remember, we're already in the middle of a ban for TikTok. So it's very likely, in fact, the bill is just being introduced now to potentially ban DeepSeek from use in the U.S. So this just opens up the ability for U.S. to continue to dominate in this space. But competition breeds more competition, which is great, because that's just more demand that's going to be needed. Again, right now, NVIDIA is the leader of its chips. It's over 20%. AMD is there, but it's going to be NVIDIA for now.
Today, NVIDIA isn't just a robust opportunity. It's a testament to tech evolution harmonized with financial growth. Engaging investors take this revelation to craft a portfolio suiting reports of resilience and innovation. The stock hovers around exciting metrics, notably trading at 26 times calendar 2025 EPE, appealing from the spectrum of 25 to 59 times. But what's your take on this unfolding narrative? Share your thoughts. Finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.